Good evening, everyone.
Good evening, Madam Sarah.
Good evening, Madam Sarah.
Good evening.
So I hope everyone took some time off to practice what we studied last time. So let's look at something similar to what we did with ABC, but a little bit different. So still, we are going to use ABC here, but we are going to apply the ABC techniques, but now bringing in something else as well. So let's write a heading: long-term decisions, and ABC. Long-term decisions and ABC. Long-term decisions and ABC. Long-term decisions and ABC. So write that ABC has many uses. ABC has many uses and is mainly used ABC has many uses and is used to unorganized and is useful to an organization and is useful to an organization and is useful to an organization when formulating their long-term strategic decisions. When formulating their long-term strategic decisions, such as when formulating their long-term decisions, such as someone is asking whether the class we are having now is for August or December sitting. This is December sitting. August sitting is already over. So we are saying that such as product pricing, mix of products, discontinuing, launching, or promotion of existing products, discontinuing, launching or promotion of existing products, and the launch of new 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 products. ABC's strength lies in the fact that it allows
Madam Sir, I beg your pardon, please.
Madam Sarah, which block are we in today?
We are having an online class. We say the physical classes are going to start after people have broken off for the AGA sitting.
All right, thank you.
So we are writing that ABC's strength lies in the fact that it allows accuracy. ABC's strength lies in the fact that it allows accuracy over costs. Over costs and drivers. Over costs and drivers.
Excuse me, madam. Pardon?
Yes.
Pardon, from it allows accuracy.
ABC's strength lies in the fact that it allows accuracy over costs and drivers for products. Over costs and drivers for products. For products. As a result, a sensible pricing strategy, a sensible pricing strategy is achieved. A sensible pricing strategy is achieved. So we write a heading, ABC with customer profitability analysis. So heading, ABC with customer profitability analysis, brackets, CPA. 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 So what we are looking at here is ABC with long-term decisions. So when an organization wants to make long-term decisions, most of the times it will find itself using ABC system, because ABC system helps us to accurately locate or allocate our overheads to different products within the company. So in this case, we find it easy to know how many costs we incurred or how much of the costs we incurred during a particular period. Because if you're a company and you cannot establish the costs you incurred during a particular period, so how are you going to be able to measure your revenue? How are you going to be able to measure your costs or your profits and so on? It becomes very difficult because you don't know the costs you incurred during the period. So here we are seeing, where can we apply ABC within the organization? Most of the times when we want to know whether we should stop producing a particular product or product discontinuation, we use ABC to help us do so. When we want to see whether we should launch a new product, when we want to see the price to set for our products, we still use ABC system, because ABC is systematic in its own way. Like we saw, ABC system helps you to identify a cost and its cost driver. So at the end of the day, you are systematically allocating your costs to the different products or services. So one of the areas in which ABC is used is customer profitability analysis, or what we abbreviate as CPA. So want to see, what does customer profitability analysis mean? So write that. So after writing that heading, write that CPA is about relating specific costs. CPA is about relating specific costs to serving customers, or groups of customers, to serving customers or groups of customers, or groups of customers, or groups.
Madam. CPA.
CPA,
Pardon, madam. I beg your pardon, please.
CPA is about relating specific costs to serving customers or groups of customers. CPA is about relating specific costs to serving customers or groups of customers, so that their relative profitability can be assessed. So that their relative profitability can be assessed. So that their relative profitability can be assessed. Such information systems would involve the use. Such information systems would involve the use of ABC. Such information systems would involve the use of ABC techniques, in order to allocate costs. 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 So write that. Such analysis allows an organization to focus. Such analysis allows an organization to focus on cost reduction. Such analysis allows an organization to focus on cost reduction by understanding the how customers consume support resources. By understanding how customers consume support resources. By understanding how customers consume support resources. By understanding how customers consume support resources, hence allowing the company hence allowing the company to focus, hence allowing the company to focus, hence allowing the company to focus, hence allowing the company to focus on the most profitable customers, hence allowing the company to focus on the most profitable customers, on the most profitable customers. In this case, only directly, only directly attributable costs, in this case, only directly attributable costs, in this case, only directly attributable costs are charged to the customers. Only directly attributable costs are charged to the customers. Are charged to the customers. Are charged to the customers. And then we write that normally CPA helps. Normally CPA helps the company. Normally CPA helps the company to identify. Normally CPA helps the company to identify the least profitable customers, the least profitable customers, helps to identify the least profitable customers, the least profitable customers, and thus devise means, and thus devising means, and thus devising means, and thus devising means of improving the least profitable group, improving the least profitable group, the least profitable group, means of improving the least profitable group, the least profitable group. So what we are trying to mean here under customer profitability analysis, we just want to assess the profitability of our different customers. How? We may have different customers within the organization, but maybe one group is not given more focus. And we find that we are giving more focus to a particular group as compared to another one. So companies find themselves having that challenge. So you concentrate on people who are least profitable to you, and you give less time to those who are more profitable. So those who are more profitable find themselves leaving your business because you've not even realized. So the customers are leaving, but you don't know that they are even leaving because you're not giving them focus and you're not analyzing them. So that is what kills most people, most businesses in different organizations, because normally different entities don't do customer profitability analysis. So customer profitability analysis is very critical in analyzing the nature of customers that we have. For example, it may not be customers, not necessarily customers, but even our products. If I have product A and product B, so product A is more profitable to me, maybe it's bringing 10 million. Product B is bringing a loss of 2 million. It means that either I have to improve on product B so that it also performs as good as product A, or I may realize that even if I improve on my services, still the profitability of B will not improve. You see, there are certain scenarios where even if you want to improve as much as you can, it's beyond your control. A particular product cannot be improved anymore. So, for example, if I'm lecturing probably 2 papers, so if I'm lecturing quantitative techniques, maybe plus business law, if these are the 2 papers I'm lecturing. So I find that quantitative techniques is profitable, but business law is not profitable. So I've finished to make my analysis and I've seen which one is more profitable and which one is less profitable. So I decide that now, since business law is less profitable, instead of stopping business law, let me see how to improve it. I start advertising my services that I also lecture business law. Now, in that case, it may not help me improve on the profitability of business law. Why? Because most people are exempted from business law. So even if someone would want to study business law with me, they cannot, because most are exempted. So in that case, there is nothing I can do about that paper apart from dropping or discontinuing that product, so that I put more energy in quantitative techniques, which has more market and which is more profitable to me. But if I consider continuing with business law, remember, it's not profitable. So I find that the customers of quantitative techniques are not happy that I give them less time. So you find them leaving. But why are they leaving? Because I'm focusing on business law. And yet at the end of the day, even me, business law is not going to help me that much because the customers are not there. So I find myself losing out because I did not do customer profitability analysis. Otherwise, if I had done customer profitability analysis, I should have seen this earlier and I should have solved the problem in time. So we cannot do customer profitability analysis without bringing in ABC analysis, because you're going to come across overheads. How are you going to deal with this? Remember, just like the name suggests, customer profitability analysis. Customer profitability analysis. We are analyzing the profitability for our customers. So we need to compute the profit, and profit is total revenue minus total cost. In the total cost, we will have the variable, and the fixed or the overheads. So what are you going to do with the overheads? So definitely you have to use ABC in that case. So ABC is very critical in customer profitability analysis because we need it at the point where they have given us the overheads and we want to apportion them. So the examiner will tell you to talk about the least profitable customer group or the most profitable customer group, and also probably to advise on how they can improve on the profitability for that. So we are going to start with a simple illustration about customer profitability analysis. And as usual, I'll also give you numbers to try out to do with customer profitability analysis. Having looked at ABC system already, this will be easy for us because the trick in customer profitability analysis is knowing how to apportion those overheads there using ABC. So customer profitability analysis is going to be simple for us because we've already understood about the ABC technique. So is there anyone with a question before we look at customer profitability analysis? Anyone with a question? So no one has a question to do with this. So I want to see which question I can use here. Okay, let's use September 2022, question 2. September 2022, question 2. September 2022, question 2. September 2022, question 2. Someone is saying my network is poor. Is it true?
No, it's not true.
Network is clear.
We are getting you clear, madam.
So they say
Someone
that.
kindly share a question in the group, please.
So we are looking at September 2022, question 2. So they are saying that a drawer graduated in 2019 with Bachelor of Science in Cosmetology. He immediately opened a stylish ladies salon known as Ladies Beauty Parlor in Ntinda. So LBP provides a service combo to the customers, which includes hair treatment with manicure, pedicure, and facial treatment. So the salon categorizes customers into corporate, fashionista, and ordinary, served in separate corners, tagged as VIP, fancy, and normal corners, respectively. The corporate, fashionista, and ordinary customers are charged 150,000, 200,000, and 100,000, respectively, for a service combo. A drawer values most the fashionista customers because they pay more than any other customer group, and he plans to withdraw the ordinary group. However, his colleague, Sophia, advised him to study the saloon's value chain to attain competitive advantage. She suggested customer profitability analysis as a good tool for customer retention, which is critical for competitive advantage. She also noted that there is need to invest more funds in working capital to store fast-moving wigs in bulk to enjoy quantity discount offers. So they say that sales amounting to 136 to 50,000 and profit volume ratio of 20% were made in July 2022. So they said the total contribution from corporate, fashionista, and ordinary customers was in the ratio of 9 to 11 to 5, respectively, during July 2022. So monthly utilities, rent and salaries amounting to 4.4, 5 million, and 8,928,000 respectively, are normally incurred. So below, they told us that below is additional information relating to the month of July 2022. So they gave you the customers. So they gave you corporate, fashionista, and ordinary. Then they also gave us the clients served. So in this case, they said that the Brazilian supplier sells wigs commonly demanded by fashionista customers at 125,000 each, but there is a discount offer of 0.1% for an additional order of 750 wigs and above. Then they said that, so they said that LBP normally uses 500 wigs in a month. The cost of storing a wig and making an order is 50 and 1,500 respectively. And they said here, required, advise a drawer on whether he should withdraw the ordinary customer group, whether he should make orders of 750 wigs, the meaning of value chain and competitive advantage concepts, the importance of value chain analysis. So here, what happens is that we have different customers within the organization. However, the company feels that it's not satisfied with one of the customer groups. So when it's not satisfied with the one of the customer groups, they feel that they want to drop that group. So you see here from this statement, a drawer values most the fashionista customers because they pay more than any other customer group, and he plans to withdraw the ordinary group. So for him, his basis is on payment, that since the other people are paying me better, why don't I do away with these groups of people not paying me well? So a drawer is depending on the selling price or on the price that customers pay to decide or to make a decision on whether to discontinue one of the groups, which is not right. You see, someone may be paying you little money, but the expenses you incur on that person they are less. Then someone is paying you a lot of money and the expenses you are incurring on them are very high. So you find that the other one paying you a lot of money is bringing losses because the costs are high. But this one who is paying little money, the expenses are few, and you're going to realize a profit from them. So using price to make a decision is not right. So that's why we need customer profitability analysis. You see, here she told you, a colleague told her that she suggested customer profitability analysis as a good tool for customer retention, which is critical for competitive advantage. You see, if you want your business to move on well, you should have what we call customer retention. Customer retention means if you started with 50 customers, they are either increasing or not going below the 50. But if you started with 50 customers and at the end of the year or at the end of the period, you have only 10, that means you don't have good customer retention strategies. So customer profitability analysis is one of those models that helps us to find means of making sure that we do customer retention. Because at the end of the day, I can analyze the most profitable, the least profitable, and I see what to do about it. Unlike if we depend on selling price or if we depend on the profit. So in this regard here, if we need customer profitability analysis, we need to first of all see the different customer groups we have. Now, I told you that MDC is set in such a way that the examiner does not ask about one topic in a number. So he brings very many topics in one number, breaking them down into part A, B, C, and D. So in all that information they have given us, you need to pick out that now this information is required in customer profitability analysis. This information is required here because like here, they asked about customer profitability analysis. They also asked about economic order quantity. So definitely information you need for customer profitability analysis is not the same you're going to need for economic order quantity. Under customer profitability analysis, we need the profit for the customers, where profit is revenue minus the costs that we incur on those customers. So the cost we have for the customers. So for the purposes of customer profitability analysis, we are going to look at part A. So we are looking at September 2022, question 2A. So let's go and write the different customers. So come and show customers. So come and show the customers. So look at the customers they have given you there. They have the corporate. So customers. So come and show the customers we have. We have corporate. We have fashionista. We have ordinary. So those are the three customer groups we have. So we go and see the data that has been given to us. So they told you that sales amounting to 136 to 50,000 and profit volume ratio of 20% were made in July 2022. Remember, we are doing customer profitability analysis for July 2022. So they told you that the total contribution from corporate fashionista, and ordinary customers was in the ratio of 9 to 11 to 5 respectively during July 2022. Now, remember, contribution is equal to revenue minus variable costs. So when the examiner gives you contribution, it means that he has already got for you the revenue and subtracted the variable costs. That is what it means. So it means that you'll just get that contribution and subtract the fixed costs in order to get the profit. Now, my question to you, do we have the contribution given to us? Do we have the contribution given to us by the examiner? From the question,
Yes, they gave us the ratios. I think in respect to sales amount.
so the examiner did not give us the contribution. And in this case, the examiner gave us sales, but the sales he gave us are for the 3 products, because he's giving us the sales that the company made in July 2022. But remember, he told us the total contribution from corporate, fashionista, and ordinary customers was in the ratio of 9 to 11 to 5, respectively, during July 2022. So he has given us how to apportion the contribution, not how to apportion the sales. So meaning that if I want to apportion the contribution, this is the ratio I'm going to use. But which contribution am I going to use? He has not given it to me. Now, in this case, we've not talked about CVP analysis yet, but we shall talk about it. In this case, the examiner gave us what we call a profit volume ratio of 20%. So under CVP analysis, there is what we call profit volume ratio. So in MDC, we normally create workings for our information. The reason as to why we create these workings, it's to help us simplify the data. So we are going to go and put workings. So put workings. So, like I've told you, we shall look at profit volume ratio and other ratios in detail when we go to CVP analysis. But for now, we are going to just get an idea about profit volume ratio. So when we talk about profit volume ratio sometimes is called contribution sales ratio. So it's normally abbreviated as PV ratio. But if the examiner does not call it profit volume ratio, he calls it contribution sales ratio. Contribution sales ratio, which we abbreviate as CS ratio. So if you come across any of those terms, they mean the same. So contribution sales ratio or contribution sales ratio is equal to contribution over sales. In MDC, when we say sales, we are meaning revenue. So revenue, another name for revenue is sales. So we are saying contribution over sales times 100. So that's what we call a contribution sales ratio or a profit volume ratio. Contribution over sales times 100, where sales imply revenue in MDC. Anyone who has not understood that? So everyone has understood. Now we go. Here the examiner has told you that the profit volume ratio is 20%. Is 20%. So normally when the examiner has not given you like the revenue, or he has not given you contribution, he'll give you profit volume ratio. So that he gives you the revenue or the sales, and he wants you to use that ratio to get the contribution. Or he can give you contribution and he wants you to use that ratio to get the revenue or the sales. So whichever. So in this case, he has given us the sales, but he has not given us the contribution, but he has given us a profit volume ratio. So still we're on a safe side. So he has told you that the profit volume ratio is 20%. This ratio is measured as a percentage. So the units for this ratio is 20%. So I come and I say 20. So we are now substituting 20 is equal to contribution. We don't know it. So I'm letting the contribution be X. Divide by the sales. The examiner has told you that the sales are 136 to 50,000 times 100. So meaning I'm going to have, so 20 is equal to 100x. So the 100 only affects the upper bit when I'm multiplying. So 100x divide by 136 to 50,000. So I come and I show that I'm going to cross multiply. So meaning I have 100x is equal to 20 times 136. So 20 times 136 to 50,000. So meaning I'm going to divide by 100 on both sides to get my X, or the contribution. So I have 20 times 136 to 50,000 divided by 100. What do we get?
27.25 million.
27 to 50,000, like that. Now, someone may wonder, why haven't you taken this PV ratio as 0.2? Because they've told us 20%. I've not taken it as 0.2 simply because if I take it as 0.2, that means I'm not going to multiply by 100. So I'll just say 0.2, because 0.2 means you've now taken into consideration the 100. So if you come and multiply with the 100, that means you've recognized the 100 twice. So that's why I've not taken 0.2. So you can take 0.2, but you don't multiply by 100. I hope we are together.
Are those
Have you understood?
simple?
Please
Pardon?
come again, madam.
If
Are
I
they
had taken 0.2, that means I've considered the 100. So I'll just say 0.2 is equal to X over 136 to 50,000. So I'll not say times 100 because I've considered the 100 on the left-hand side. So I'll just come and I cross multiply. And I say X is equal to 0.2 times 136 to 50,000. So if I don't consider the percentage or the 100, and I just bring 20, that means this side I have to multiply by 100. I don't know whether you've understood.
Yes, I've understood that. Thank you.
So
Does
now,
that principle only apply to, because some of these concepts, we've known them when you have an equation with a multiplication of 100% on the side, it affects the denominator and the numerator. But
no,
here we are changing for now.
it doesn't. Why? Actually, if someone here had X out of 136 to 50,000 times 100, someone would have said these zeros are going to cancel out with those zeros. So that you have 20 is equal to X out of 136 to 50,000. Now, you cannot say that the percentage, like you have X divided by 136 to 50,000 times 100. Mathematically, you cannot multiply the 100 up and down. And you say this is the same as 100x divided by 136 to 50,000. You still multiply by 100 down. No, that is a wrong concept. Because whenever we are multiplying fractions, like you have 2 out of 3 times 4, do you say that it's the same as 2 times 4 divided by 3 times 4? Or you say that this is the same as 2 times 4 divided by 3? Do you get it? Yes? The person who was asking about multiplying up and down. I don't know whether I answered you. So it is only multiplied through what is up. When we are multiplying, we don't multiply with down. So that's why we've taken it as that. Remember, we've let X represent contribution. So this one here is what we are calling the contribution. So which we are abbreviating as X. So it means that the company's contribution is that company for the 3 customers. But remember, we are analyzing, we are doing customer profitability analysis where we are analyzing each of the 3 customers. So we want to know of that contribution, what went where. So you have the corporate customers, the space you've left. So you have the corporate customers, you have the fashionista customers, you have the ordinary customers. So we want to know of that contribution, what goes where, because we are doing customer profitability analysis. So here, the examiner already told you the ratio to use when you want to apportion your contribution. So the examiner told you that the total contribution from corporate, fashionista, and ordinary customers was in the ratio of 9 to 11 to 5 respectively during July 2022. So I'm asking you, how do we apportion that total contribution we've got? Yes.
You first add the total ratios, which is 9 plus 11 plus 5, which give you 25. And then now you get each.
So meaning the total is 9 plus 11 plus 5. What does that give us?
25.
25.
So meaning that the first customer group, which is corporate, they've told us that for it, it has 9. So we have 9 out of 25 times what we want to apportion, which is 27 to 50,000. So 9 divided by 25 times 27,250, what do we get?
9,810,000.
810,000 shillings. So we go to the next, fashionista. So come and show the fashionista customer group. Fashionista. So fashionista here is 11 divided by 25 times 27,250,000. So what do we get there?
11,990,000.
We go to the next, ordinary. So ordinary is 5 divided by 25 times 27,250,000, giving what?
5,450,000.
Million.
So probably that is why they wanted to withdraw the ordinary customer group, because it has little contribution and revenue, like they said. So we are going to come and show here contribution, and we show the examiner. If you want to see this, go to working 1. So here is where we have our working 1. So workings 1, that's where you'll find our contribution. So you come and show that 9,810,000. So 9,810,000. So someone may wonder, do we need to show the shillings? Yes, it is important to show that whatever you're doing here is in shillings. If you want to cut off thousands, it is okay. So fashionista, here we've got 11,990. Whereas ordinary customer group is 5,450,000. So we finished contribution. So meaning we've already got the revenue minus the variable costs. So what we are remaining with are the fixed costs or the overheads. Anyone with a question, please ask. So none. We go to the next statement. So they told us that monthly utilities, rent, and salaries amounting to that and that respectively are normally incurred monthly. So these are fixed costs. So they are fixed costs in nature, and they have not told us what goes where, what goes where. So that means these are overheads, because we don't know where they came from. So that is the relevance of ABC, to show you where these costs came from. So we come and show the fixed costs, or you can call them overheads, whichever you want to call them. So remember, with ABC system, you first list all of them if you want to use ABC system. So we come and list them. They gave us utilities. So utilities. They gave us rent. So we have utilities. So you can list all of them. Let me show the question again. So we first list all the overheads we have. So utilities, we have rent. Then we have salaries. So each of these is going to call for a working. So we are going to represent the workings. Remember, working 1 has already gone to the contribution. So that means we have working 2, working 3, and working 4. So we already have that one. So we go to workings 2. Already finished 1. Now we go to 2. 2 is utilities. Remember, we are using the ABC system, and under the ABC system, you identify the cost driver for the fixed cost or the overhead. In other words, a cost driver is a factor that causes that cost. So you need to look at the information given to you and see which factor could have caused that cost called utilities. They told you that below is the additional information relating to the month of July 2022. Client served, floor space, man hours. So what do you think could be the cost driver for utilities? This is a saloon.
The client
Client served.
The client served.
So come and show cost driver is clients served. So you compute the overhead absorption rate. So overhead absorption rate is equal to the cost you want to apportion. They told us that utilities are worth 4.4. So we get the 4.4, so the 4,400,000, and we divide with the total cost driver. The cost driver is client served. So we divide with the total number of clients served for the 3 customers. So what is the total number of clients served for the 3 customers?
800.
800.
So divide by 800. So which rate do you have?
5,500.
5,500 shillings per client served.
So 5,500 shillings per client. So per client. So now we allocate after getting the rate to use. So we start allocating our cost. So the first group is corporate. We come and show that corporate is equal to, we use the rate. The rate is 5,500, and we multiply with the number of clients relating to corporate only. So the number of customers relating to corporate are 250. So we say times 250, because our rate is per client. That's why we are multiplying with the number of clients. So what do we get there?
1,375,000.
1,375,000 in the brackets. So you take that to the statement above. You go to the next group, which is fashionista. So fashionista, you use the rate 5,500 times the number of clients served 400. So times 400. What do we get?
2,200,000.
2,200,000.
200,000.
So you take that above 2,200,000. So we are putting this in brackets because we are going to subtract from contribution. Then lastly, we go to the ordinary customers, and the ordinary is 5,500 divided by the customers, that is 150. So what do we get there?
825,000.
825,000.
820.
25.
825,000. So we also take that above 825,000. So we move to working 3, which is rent. So go and show the examiner 3 is rent. So 3 is rent. So what do you think is the cost driver of rent from the data they have given you?
Floor space.
Floor space.
So cost driver is floor space. And they've told you that the floor space is measured in square meters. So floor space, for it, it's measured in square meters. So brackets, square meters. So come and compute the OAR. So the OAR here is equal to the cost we are apportioning 5 million. So we divide by the total cost driver. So what is the total number of floor space?
250.
250.
So divide by 250 and what do we get?
20,000.
20,000.
20,000.
So this is equal to 20,000 shillings per meter. So come and show the customers here. So we are starting with corporate. 20,000 times the square meters for corporate, which are 80. Go to the next fashionista. So this one is the same as
1.6.
1.6.
Yes.
So fashionista, we have 20,000 times 136. What do we get?
2,720,000.
2,720,000.
Yes.
Then we go to ordinary. So ordinary, 20,000 times 34.
680.
680.
280.
680.
680. So we take that above. So let's go 1.6. So after 1.6, 2,720. 680,000. So go to salaries. So next, salaries. So for salaries, so we go and see the cost driver for salaries. So what do you think is the cost driver there for salaries?
Man hours.
1 hour.
Man hours. So cost driver is man hours. So we look for the OAR. So the cost we are apportioning, here they have given us 8,928,000. We divide by the total man hours. So look at the total man hours.
5,760. 5,760. 5,760.
5,760. So what do we get?
1,550.
1,550
Yeah.
shillings per hour. So we come and show corporate 1,550 times the number of hours 1,500 fashionista 1,550 times the number of hours 3,180 ordinary 1,550 times the number of hours 1080. So what do we get? First, what do we have?
2,325,000.
Next,
4,929,000.
lastly,
1,674,000.
1,674,000. So come and show the profit. So we are showing, we are getting contribution and subtracting the fixed cost to show the profit. Please hurry up. Get your contribution and subtract those fixed costs.
The first one, 4.51.
Two one four one.
2,141. The second one. The last one is 2,271.
2.271.
Madam Sir, the second one is 2,141.
2,141. Yes.
Yeah.
So the examiner was asking you to advise a drawer on whether he should withdraw ordinary customer group. So should they withdraw ordinary customer group or they should not? What do you think we should tell them?
They should not.
It has more profits than the fashioned.
So we are going to tell them that a drawer should not withdraw. A drawer should not withdraw the ordinary customer group. A drawer should not withdraw the ordinary customer group because a drawer should not withdraw the ordinary customer group because it has more profit of 2271,000, more profit of 2271,000, which is higher than that, which is higher than that, which is higher than that, which is higher than that of the fashionista customer group, which has 2141,000 shillings, which is higher than the one for fashionista customer group of 2141,000 shillings. And then we write that none of the customer groups will yield a loss. None of the customer groups will yield a loss, as illustrated above. None of the customer groups will yield a loss, as illustrated above. So, however much the ordinary is bringing more profits than the fashionista, we cannot tell them to withdraw fashionista because fashionista is also profitable. But if fashionista was bringing a loss, we would have told them to drop the fashionista instead of the ordinary because the fashionista is bringing a loss. But now it's also bringing a profit. So we cannot advise them to withdraw the fashionista. Anyone with a question about that, an inquiry somewhere, please ask. Anyone with an inquiry to make?
Excuse me, Madam Sir.
Yes.
I have a small inquiry. When you are calculating the contribution, why, when you are taking the profit volume ratio, why didn't we take 20 divided by 100?
Because the 100, you multiplied it the other side. So if you had not multiplied by 100, it would be okay for you to take 0.2 on the left-hand side.
Okay. Oh, okay. Thank you very much.
Now, do you need another example or there will be?
We need.
So
Trial numbers for you.
the only trick about this number is the contribution ratios, or there's anything else.
Which is not also like all the numbers that they will talk about contribution sales ratio. No, it's only this number, or if you, in case you find it elsewhere, you can also apply it. But I'm not saying that all numbers about customer profitability analysis, they'll be bringing in a trick for contribution sales ratio. No. So in other numbers also, you will find their own tricks put there. So
Because
you
I
need
was
another.
looking for
Yes.
the difference between this customer profitability analysis and the normal ABC that we have we just finished. I'm seeing it's all less the same. The only difference is here you have to attribute it to the customer.
And here the question is always focusing on the customer. Should we, which customer is most profitable? So they are always focusing about customers, customers, and customers. So some people are saying we do another example. So let's look at June 2022. June 2022 question 4B. June 2022 4B. June 2022 4B. So after this one, the rest will be yours to try out. June 2022 4B. So here they say that Chisoro Utilities Limited, KUL, was established in 2016 to deal in distribution and sale of power in Chisoro, Uganda. KUL has invested heavily in customer care services with the objective of maximizing profits. However, the profits have failed to grow despite this investment in customer care. The management accountant suggested that customer profitability analysis should be performed to see the best performing customer group, and Pareto analysis should inform the investment in customer care. He also proposed the use of margin of safety to ensure that the company is operating in safe profitability zones. The managing director also recommended use of feedback and feed-forward controls to ensure operational efficiency, which will realize the profit maximization objective. KUL sells power to domestic, commercial, and industrial customers within Chisoro, but tariffs are dictated by the Energy Regulatory Authority. Below are budget extracts relating to the month of January 2022. So they give you power consumers where they have domestic, commercial, industrial. Power sales in units, tariff price per unit, variable cost per unit, sales mix in percentage, number of lines maintained, customer calls, customer field visits. Additional information: budgeted fixed costs, telephone charges per call, field staff allowances per visit, customer care allowances per call, line maintenance expenses per line. KUL plan to incur total fixed costs of 40 million and achieve profit after tax of 5.6 million during the month of January 2022. The prevailing income tax rate is 30%. Required: advise KUL management on the margin of safety in units for each customer group for January 2022, most profitable customer group for January 2022, meaning of feed-forward control. So I told you that different topics are set in one number. So here they are asking about CVP analysis and customer profitability analysis. So we only pick information relating to what we want. So information that is not needed under customer profitability analysis, we leave it for other parts. So our emphasis here is part B, where they're asking about the most profitable customer group. So if we want to find the most profitable customer group, one thing we should know are the customers whose profitability we are analyzing. Thereafter, remember, profit is total revenue minus total costs. So if the examiner has given you contribution, like in the number we've just done, you start from contribution minus the fixed costs, which fixed costs in that case will be the overheads, which will be apportioned using ABC system. So in this case, the customers we have are domestic, commercial, and industrial. Those are the customers we need to evaluate their performance, whose performance we need to evaluate. So we are going to go and put our format. We have power consumers. So power consumers. And the power consumers, we have domestic. We have the commercial and the industrial. So those are the ones we have. So we go and see the information they've given us so that we know whether we are starting from contribution or revenue. So when we look at this number, they told us that below are the budget extracts relating to the month of January 2022. Remember, we want the most profitable customer group for January 2022. So if the information Maybe they want most profitable customer group for the year 2022, and yet they have given you figures for 1 month. That means you are going to multiply by 12 to make them annual. So first of all, they have given us power sales in units. They have given us the tariff price per unit. Remember, these are people selling electricity. So meaning that the tariff price per unit, that is more like their selling price per unit. Then they give you the variable cost per unit. So meaning here, we have to go back to revenue. So we are going to get our revenue and we subtract the variable costs in order to show the contribution. So we come and show revenue. So revenue, remember, is price times quantity. So we are going to show, let's first of all show shillings, shillings, and shillings. When we realize that there is a need to cut off thousands or millions, we shall do so. So we are starting with revenue. We don't need the working for this because they have already given us the selling price per unit and the units. So domestic, the selling price or the tariff price per unit is 750, and the power sales in units are 120,000. So we have 750 times 120,000. Commercial. So commercial, we have 650 times 60,000. Whereas industrial, we have 550 times 20,000. So come and compute the figures. So what do we get?
90 million.
90 million. Next.
39 million.
39.
That one
Is
is
it
11.
39 or just 30?
300 and
39.
39.
39 million.
39.
And the
That
last
one
one
is
is what?
11
11
million.
million.
So they gave us variable costs. We come and show variable costs. So they are also per unit. So we have to multiply with the number of units. So 550 times 120,000. The next 350 times 60,000. Then 150 times 20,000. So what do we have?
66 million.
66 million.
66 million.
$21 million.
21 million. Next.
3 million.
3 million.
So when you have revenue and variable costs, that gives you contribution. Please remember that always revenue minus variable costs gives us contribution. So compute the contribution very fast for each.
The first one is
24.
Yes.
24
20
million.
Next,
18 millions.
18 million.
next,
8 millions.
8. So we go and see what they gave us next. So after that, they told you additional information, budgeted fixed costs. So when we finish contribution, definitely we are to go to fixed costs or the overheads, and they have given us the fixed costs. So come and show fixed costs next. So whenever we see fixed costs or overheads, that means we are going to use the ABC system. The examiner does not need to tell you that. Now, we look at the data given to us. So they have telephone charges, field staff allowances. Now, one thing you should see, they have given you telephone charges per call, field staff allowances per visit, customer care allowances per call, line maintenance expenses per line. What does that show us? What does that
They
show us?
That the
given us the
OAR is already
fixed
calculated.
So the examiner has already computed for you the OAR. So what you're going to do is to write the costs, telephone charges. So not per call, just the cost is telephone charges, but they have told you the rate. So you're going to come and list the fixed overheads. We have telephone charges. So telephone charges, they have told us per call. So the rate is 3,400. So that 3,400 is for each call. So we go and see the number of calls. So here they have told you customer calls. So that means we have 3,400 times 1,400. Next, we are using 3,400. So here we don't need workings because the rates are already computed for us. So there are those circumstances when you'll find the rate computed for you by the examiner. So you don't need to recompute it. So what do we get first?
4,760,000.
Pardon?
4,760,000.
In brackets. Then we have
3.4.
3.4.
3.4. And the last one is 340,000. So move to the next. Next, they've told us field staff allowances. So field staff allowances. So field staff allowances, here they've told you that field staff allowances per visit. So that means they depend on the visits. So you go and see the visits. So the visits, they've told you customer field visits. So 100,000 times 58. So 100,000 times 58. 5,800,000. 100,000 times 41. So it is 100,000. Then 100,000 times 16. So that means 1600,000. So I'll move to the next. Next we have customer care allowances. Customer care allowances. So customer care allowances, here they have told you per call, customer care allowances per call. So they are giving you a rate of 3,000. So the calls are there, 1,400, 1,100. So 3,000 times, so 3,000 times 1,400, 3,000 times 1,000, 3,000 times 100. So we come and get, so 3,000 times that, what we get?
4.2.
4.2. Then 3 million. Then 300,000. Then next they are giving you line maintenance expenses per line. So they gave us the number of lines maintained, 23, so 250,000. So we have line maintenance expenses. So line maintenance expenses. So line maintenance expenses, 250,000. So 250,000 times 23, 250,000 times 14, 250,000 times 3. So what do we get?
5.75.
5,705.
No, 5.75.
750.
Next,
3.5.
3.5.
next,
750.
so we finished that. So we don't have any other fixed costs. Now we can get the profit. So profit. Please compute very fast.
3.49.
3.49, is that what everyone is getting?
Yes.
So 3.49. 3,490,000.
Yes.
$4 million for commercial.
4 million.
5,010,000 for industrial.
So we go back to the question and see how to conclude. So the conclusion depends on what they wanted you to advise. So here they told you advise management on the most profitable customer group for January 2022. So this time they want most profitable. So you can see that it is industrial. So we are going to conclude that therefore the most profitable customer group, the most profitable customer group is industrial. The most profitable customer group is industrial with a profit of 5,010,000 shillings, with a profit of 5,010,000 shillings, followed by customer group, followed by commercial customer group, while the least profitable, we are saying followed by commercial with a profit of 4 million, followed by commercial with a profit. We need to tell them the profit. With a profit of 4 million, while the least profitable customer group, is domestic with a profit of 90,000 shillings. 90,000 shillings. So the examiner may go ahead and tell you to advise the company on what should be done in order to improve on the profit of the least profitable customer group. So how do you think they can improve on the profits of the domestic, because it's the least profitable? What do you think they can do? Yes.
Yes, Madam, sir, I'm thinking of one, when you look at that group, it has the field staff allowances as the highest expense, which is 5,800. So I can advise them in terms of cutting, like reducing those allowances or looking at the cost driver, which is the visits they make, reducing the visits they make.
So how can they reduce? Because the field staff allowances, if you reduce on the visits, that means your customers are not monitored. So which alternative are you giving them? If they are to reduce the visits, which alternative are you giving them? Do you get it?
Yes,
We've said that we have field staff allowances, which will depend on the number of visits. So we should reduce on the number of visits so as the field staff allowances can be reduced. That is okay and it's correct. So how do you reduce on the field visits? This is like Umeme. Do you see Umeme people coming to your places these days? Or is it you ETCL? Do you see them coming to your premises these days? So what are they?
Prepayment system.
So they can introduce prepayment systems. They can put their services online, like digital platforms. So these will help to reduce the field staff allowances. You get, so we need to give them practical examples.
Another recommendation that I see would be maybe reducing the tariffs to appetize the consumers.
Maybe giving discounts to consumers. Like normally we saw Umeme, I don't know whether it's still there. Normally when you buy electricity in the first days of the month, I don't know whether that was true, but I always heard people talk about it, that whenever you buy units in the first days of the month, you get more units than when you buy towards the end. So you need to put those promotions so that you entice consumers to buy more electricity. You also need to like customer care allowances. Introducing digital platforms will help you to reduce the field staff allowances and the customer care allowances, because the customer care allowances are per call. So if I introduce digital platforms, instead of people calling us, there is that self-care platform. In case you have an inquiry, you just use the app. So automatically your inquiry is solved instead of keeping on calling us. Line maintenance expenses, prepaid meters will help on this. So here you'll realize that the line maintenance expenses will be reduced. The telephone charges were depending on what? They were per call. So how can you reduce on the telephone charges?
Introduce SMS alerts.
Will that be effective for your customer? So I think the digital platforms will reduce on the telephone allowances. So that is the kind of advice. Yes.
Also, not calling and waiting for the clients themselves to call through.
So the digital allowance, the digital platforms will help that. So normally when the examiner tells you to advise, he wants you to give practical examples or practical advice, not theoretical. Like when you say, when it comes to reducing the price of a commodity, you find that the organization is the one losing, because now you are reducing on the price. So when you reduce on the price, it's you who is losing. So you find that your performance could even be worse. So we don't normally want to talk about price reductions because already we are performing poorly. Now we are reducing on the price. How are we going to perform better? So it's not advisable for you to advise basing on the price, but you can advise on giving promotions. Promotions mean your price may not change, but promotions like buy one, buy two, get 1 unit for free. That is a promotion. I'm still maintaining my price at 10,000, but I'm putting a promotion that you buy 2 units, you get 1 for free. That is better than reducing on the price that the company is charging. So anyone with a question about customer profitability analysis, please ask. Because we've seen those numbers.
But we saw a reduction in prices of a unit when UEDCL came in. I am hoping that probably it added, it increased the consumption rate of the domestic.
You see, a new company and a company which is already there suffering, the techniques they may use are different. Someone who is coming in the market for the first time may use that approach because they want to get customer confidence. They want to build the hearts of customers. But now for me, I'm already there, but I'm struggling. Even the price I'm charging you, like when you look at the revenue. So the revenue here for domestic, we are selling 750 units at 120,000. You see, our price is high, but the units we are selling are many. These ones are charging lower prices, but their units are few. So our challenge is not on the revenue, by the way. When it comes to the revenue, domestic is performing better than all these other two. But our problem, we fail to manage our costs. That is where the problem is. Look at the variable cost, 66 million. These others are having 21 and 3. So that means our problem is not the revenue. Our problem is cost. So when you're advising there and you depend a lot on revenue, that means you are not being realistic. The problem is not with the revenue. The problem is with the costs. So That is it about customer profitability analysis. But like I've told you, every question is unique.
Excuse me, madam.
Yes.
So in this case, whereby we are asked to, where the question is like this one of calculating the most profitable customer group, where I'm going to conclude and tell them maybe, for example, that the industrial power consumers generate the highest profit margin. So do I now need after to come and give reasons basing on how I'm seeing the variances in the costs? If I look at, for example, the telephone charges, and I see that the domestic power consumers are the ones which are having a higher cost, do I only have to focus on that, or I have to give a general reason on ways on how to reduce, for example, these 4 overheads that have been given?
Remember, the examiner's question would be to advise on ways of how they can improve the least profitable customer group. So your focus is on the least profitable. These others don't have a problem. Your problem is the least profitable. And also, if they don't tell us to advise on how to improve, don't advise. Like this number, advising was not relevant. They wanted you to advise on the most profitable customer group. That's all. So don't go into details of telling them that these costs should be reduced and that. No, they didn't need that.
Thank you.
Excuse me, Madam Sarah.
Yes.
Please come again. How do I tell from like this question if OAR has been calculated?
They give you the rates. So a rate is a shilling per something. Like here, they have told you telephone charges per call, shillings. So that is called a rate. You get it?
Yes, I get it. Thank you.
But if they had told us telephone charges, that one is not a rate, it is a cost, which we have to apportion and distribute among the products or services.
Okay.
So that's how we tell.
Excuse me, Madam Sarah.
Yes.
I don't know if you talked about this, but is there any way we can also comment about variable costs? Because I see they have a high figure for the domestic.
But because they did not tell us what is in the variable costs, so I cannot comment about the variable costs. They have not told me whether the variable costs are relating to labor only, or they are relating to labor and materials, or they are relating to other variable costs. So we don't know what is in the variable costs per unit. So I can't comment.
Okay.
So I want, you can only know that you've understood when you try out a number or numbers. Otherwise, if you don't try out numbers, you may see that you've understood. And that is the funny trick about MDC. You see that things are shifting very well. But when you reach a number, you don't know even where to start from. And yet in class, you've seen that everything has been shifting. So unless you practice, that's when you can know the tricks these examiners use, because they are very tricky in whatever aspect. They are very tricky. It's hard for them to give you something direct. So the more you practice, the more you see the tricks that they use. So I want to give you these numbers for you to try out in your free time. So let's write them down. December 2023 1B and 3A Roman numeral 2. December 2023 1B, and 3A Roman numeral 2, and 3A Roman numeral 2. August 2023 4A, August 2023 4A, August 2023 4A, August 2024 4B, August 2024 4B, August 2024 4B, March 2021 1A, March 2021 1A, March 2021 1A, December 2016 3A, December 2016 3A, December 2016 3A, August 2016 1C, August 2016 1C, August 2016 1C,
I beg your pardon, on December 2016.
3A. Then August 2016 1C, June 2016 1A, June 2016 1A, June 2016 1A, November 2015 2A, November 2015 2A, November 2015 2A, June 2015 4A, June 2015 4A, June 2015 4A, August 2015 4A, August 2015 4A, August 2015 4A, Next. Now, in the numbers I'm giving you, some have ABC, not necessarily customer profitability analysis, because last time I didn't give you some of these numbers that have ABC analysis. So I'm also giving them to you now so that you can try them out in your free time. So if you come across them, how you know that it's customer profitability analysis? The examiner will tell you, identify the most profitable customer group. So that means he wants your focus to be on the customer groups. So that is customer profitability analysis. So have we finished to write August 2015 4A?
Yes,
Yes.
madam.
June 2013 2A, June 2013 2A, June 2013 2A. So try out those numbers relating to what we have here. So next time we are meeting, we are looking at a new topic. Remember, our topic here has been traditional costing and ABC, where we've been talking about costing systems. So we said that costing systems that we use are two, traditional or ABC system. And we've seen how the two systems operate and how numbers relating to them are examined. So I hope everyone has understood traditional costing and ABC, also the applicability of ABC. But ABC is cross-cutting. It's not only in customer profitability analysis. Even in other topics, we are going to meet ABC there. So when we cover other topics, I'll keep on reminding you about what we covered in the topic for ABC. So in that case, I'll not need to explain too much because everyone will have the knowledge about ABC system. So it will just be a reminder. So our next topic will be relevant costing. But you can also write down this number from June 2010, another number, June 2010, 5B. June 2010, 5B. June 2010, 5B. June 2010, 5B. So that will be our next topic, definitely, which we can't start on now. So it's a very crucial topic under MDC because we need to know what relevant costs imply. So how do we know that this is a relevant cost or it's irrelevant in nature? Those are the things we are going to talk about next. So please make sure you try out those numbers to see whether you've really understood this topic we finished or you've not understood it. So we've been moving slowly because we have people still enrolling in, but starting next weekend, we are going to be a little bit faster because we don't expect very many new people now. So those who need your study packs and you paid part of the tuition and you've not